Hello, my name is Catherine, and today we're having this webinar. This is the third webinar in the string of webinars organized by Trading Marathon and LH Crypto, the first crypto broker. I hope all of you have watched the first two of them about the psychology of trading and about margin trading. This marathon is designed for people who have tried crypto trading and are now coming to, well, they're trying to use LH Crypto as that has all the advantages of leverage and margin trading, and um, it's also for people who are just new to any trading at all and want to understand all of those terms a bit better and make sense of them. Um, Today we're going to talk about technical analysis, technical details of trading, and in particular, well, TA, technical analysis. Traders use technical and fundamental analysis to predict further price action, which direction the price is going to take. um, okay, technical analysis for forex market or for any kind of market at all. It's one of the instruments used to predict changes of price. This analysis is based on it's based on the theory that the market moves in cycles and that it repeats itself, and the price action repeats that what has been once will come again someday, and that it moves in some patterns that can be detected, analyzed, and used in your work. Mm. Traders who use different TA instruments have the charts where the price action is shown. They choose different time frames depending on their strategy. These charts are organized to show different price action details, when the price goes up or down and how much it fluctuates in between. Traders apply different mathematical indicators to these charts, which helps them predict the future of this trading assets of, I don't know, Bitcoin. But the thing is that the market is not a strict mathematical formula. It has some patterns, but still, it is a whole complex of actions made by, first of all, people or institutions governed by people, and this actually makes the prices change. Mm, it can be predicted, but never 100% sure. Still, there have been and there are a lot of attempts to find this golden formula, this golden grail that can fix all of your problems in trading and in life and everywhere, and give you the clearest picture of the market, clear as a baby's tear or something. And still, even these genius people and these genius patterns they provide us, they can't be 100% solid and concrete. Um, this is why a lot of instruments and indicators appear all the time, and there will always appear new ones based on the older ones for new, better strategies, and mm, some of them may even work most of the time, but never always. Um, okay, I hope you see. Uh, Traders can basically buy or sell something. Buyers are called the bulls and sellers are called the bears, and therefore upward and downward trends are called the bull trend and the bear trend. Um, depending on that, people who want to buy or sell some asset, and how many of them there are out there and how much money is involved into buying or selling, all of it makes the price change. And when there's the bull trend, when the demand is high and everyone wants to have this asset so badly, the prices go up. And when everyone wants to get rid of this thing, no one is interested in it anymore, thank you, then there is the bear trend and the prices go down with the demand. So basically, what you have to do is to tell where is the majority, on the bull side or on the bear side, and act correspondingly. And the majority is mostly about the money involved, not the number of people buying or selling, but it also depends. We'll talk about that a little bit later. Um, as I have already said, there are countless theories, strategies, types of instruments and indicators. And speaking about strategies, our next webinar is mostly devoted to strategies, so don't miss it. And well, you don't have to know all of them. You don't have to be like a walking encyclopedia, having all of this in your memory. No. Mm, it is most important to know the most popular instruments used by most of the traders. Because if they use these TA tools and act depending on what they see with these instruments, these most popular instruments, they then you can just join the trend and turn on that. And there is no point in trying to work with an indicator you don't understand. It will only make you lose your money. So, okay, let's switch to the most basic things about TA and any analysis at all. Um, First, the price encompasses it all. I think it was Charles Dow, the famous creator of Dow Jones, who said that. So everything that happens to this asset, to this cryptocurrency commodity, to the country where this cryptocurrency is, it is shown in the price action, and the price reacts to what happens. Um, Second, the price has some directions most of the time, not always, and we'll talk about that later. So you may not see it yet. It may be very subtle, or it may be slow or horizontal, but there always is something which you can use. Mm, and third one is that the history repeats itself. You can learn what happened before and apply it to the different circumstances. The set may be different, but the actors and the actual play they show, it's always the same. Okay. Imagine you open your trading platform, and I hope for most of you it's LH Crypto, because this marathon is based on their trading platform. And what do you see after you open your trading terminal? On your left, you see a list of assets, trading assets like cryptocurrencies, currency pairs, stocks, commodities, etc. They have, well, more than 200 of them. You choose one or several, and there opens a chart window with different types of charts, and you're going to read them to see what the price has done already and where to predict where it is going to go next. So there are numerous types of charts, but we're going to check three most popular of them. And the first one is the line chart or linear. It is basically it's well, the smaller ones are for quotations. So every time some quotations is given, it puts a dot and then connects all those dots in a line. You see here a bigger chart for bigger time frames, so for almost a year. And it, well, actually, it shows well, people, as far as I know, people prefer not to use line charts for larger time frames because it doesn't give you a clue about the fluctuations, about the extremes that the price has met during some period. It only gives you most basic idea. Mm, the second type is a bar chart. So a bar chart has all those different lovely bars or columns that each of them is for some period of time. And so the left mm, the left on the left of each column you see the open price. It's the price with which the price entered this period. The column itself shows how much the price fluctuated over this period. So it has the extreme, maximum extreme, and the minimum extreme. And on the right, there is the close price, which is the price which was at the close period. And of course, the color of this bar or this column is shows whether the price went up or down. Clear. But close to it, but not the same, are Japanese candles. So they also show you this. Well, I'll show you closer. They show you the candlestick body. This is the difference between open price and close price, or vice versa. And the candlestick shadows, those sticks, those narrower ones, they show how much the price fluctuated during this period. And well, I hope you see both me and the picture. And there are different types of Japanese candles. Some platforms show them white and black, some show white and red, some green and red, and this green and red, they show if the price went up or down. Well, personally, I prefer Japanese candlesticks. Maybe maybe it's because I just love everything made in Japan, I don't know. Or maybe it's just because it's the most convenient one. On this chart, you can clearly see the open and close prices and the fluctuations and the extremes, and it's very graphical. You can see it's easy to see, and it doesn't take too much time to get this clear, get the whole image. Mm, okay. Um, Basically, you can make your technical analysis with only this chart. The candles are enough to make a prediction. Is there any trend? What is the trend, bull or bear? How long is it going to last? But there are numerous additional patterns and instruments that can help you see the picture better and notice the patterns quicker and notice the price action quicker. Mm, and oh no, it's too early. Okay, I wanted to talk about volume analysis. Volume analysis helps traders see how many trades are made for this particular asset and this particular price, which is, in other words, how much people are interested in this price and asset. It can give some impression about further price action, but you can't rely on volume analysis too much. It is a helpful tool, but it can be applied only as one of a complex of TA tools. Mm, and there's also a trick with with volume analysis, so that if you take bigger foundations and financial institutions, they can operate with very large funds and they can use these funds to make it seem like the market is interested in some particular price, though it's only this one institution which which is making it all up, making it out of the air. So it is more advisable to take into consideration both the number of trades and the money involved. You can also judge by the quotations changes. The more often they change, the more changes there are. Я тут записываю, да. The more often they change, the more changes there are, means that the market is more interested in this asset. Okay, let's finally get down to the prices themselves. There are trends. Depending on their time frames, they can be short term, medium term, or long term. Trends can go up or down, in other words, be bull trends or bear trends. There can also be no trend at all or a sideways trend when the bulls and bears found their perfect balance and none of them is the majority. And the price keeps fluctuating within its trend in waves. The borders of these waves are called the resistance and support levels. The local minimum is called the support level, and when the price strikes its local maximum, it's called the resistance level. Most traders believe that if you get the trend direction right, then these levels can help you predict the further price level because what is the resistance level now can become the support level soon. It's hard for me to talk that much. Okay, so these resistance and support levels, if you draw a line to connect them, make a sort of a channel. This channel basically is the trend. Channels, just as trends, can be up or down trends or channels. Please note that sometimes these levels don't form any particular trend at all. They just keep going here and there and not forming any particular trend, just hanging around. Have a nice time, I guess. This is called a sideways trend, the sideways channel. And it is better not to mess in when such type of trend is involved because it's harder to predict what the prices are going to do next. And technical analysis is actually, well, it's almost useless here. So, okay, summing it all up. First, there's a trend. Not all the time, but well, some people say that in 25% of times, but well, I'm not sure about that. Okay, you have to find the trend. Notice it with the help of TA or presume and find it based on the fundamental analysis. Second, find the channel and its borders, it's the levels. Trader's task is to buy cheaper and sell higher, or vice versa when you go short. And it's important to see when the trend is going to change, when there is the reversal coming, and leave, flee before it comes. So this is what we are going to talk about next. How to predict when the trend is going to reverse. And again, we're going to look at the most popular tools and indicators and patterns because the more traders use it, the better it works. There are several. most popular patterns. Well, of course, there are dozens and dozens of them, and you can look all of them up. But, well, we'll take just three most popular that help you learn the most basic stuff. Okay, they can, well, they can also help you see the trend reversal coming. Um, well, even though technical analysis is about figures and numbers, it is a quite precise thing, or it may seem so. These patterns are still very personal and subjective. Where one trader sees something, another sees nothing. It's like watching the clouds. You can see a mouse holding a hammer in its lovely little paws, and your partner can see a dog unicorn. I don't know. But, well, you can still be standing on one same place, look at one same cloud, and see very different stuff. So, well, okay, let's get down to business from dog unicorns. Um, the first button I'm going to talk about is called Head and Shoulders, like the shampoo brand, but in trading. There are Head and Shoulders or inverse Head and Shoulders depending on the direction. With this one, the price goes in waves and has three maximums in a row, and the second one is a bit higher than the first and the third ones. And this one is the most classical textbook one. It shows that soon the reversal is coming and the trend is going to change. Um, Sometimes this giant has no head, only the neck and shoulders, and this one is called double top or double bottom, depending on the price direction. It happens when the price has two top extreme points, which signal that soon it is going to move in the opposite direction. Well, this one is harder to detect and to predict, and you have to see if it's this one or our next button. Sometimes head and shoulders are at the same level. This one is called triple top or again triple bottom. All of these patterns may show that the trend is going to reverse, which means a new trend, or it is going to slow down and just vanish. No trend. There was trend and now there is no trend. But these patterns can only show you that the price is going to change sharply. They also can give you a clue about what it is going to be, what the price is going to be next. But again, the more indicators and patterns you use and other TA tools you take into account, the better, because one thing can give you a crude idea, while two or three can help you form a solid and professional opinion. Next thing is a technical indicator moving average. Here we have simple moving average. Um, this one is one of the simplest technical indicators on financial markets. It can give you a rough idea about the trend and the points where to open or close your order. Simple moving average is a curve that shows the price fluctuations in a smoothed, filtered way. You can set different smoothing factors and see very different results. Mathematically speaking, these moving averages are all mathematical average. They just take into account more minor or bigger fluctuations. They smooth more or less. And again, as with chart patterns, this indicator works best when there is some trend in the market. If there's only a sideways trend, then this indicator can give you a lot of false clues. So the first thing you have to do is to find out if there is any trend at all. And This next index is going to help us do that. Um, to find out if there is any trend, you can use this DMI, or Directional Movement Index. This index helps you see if there is any trend and how strong it is. It consists of three parts: Average Directional Movement Index, or ADX, Up Directional Indicator, or plus DI, and Down Directional Indicator, or minus DI. Usually, minus DI and plus DI meet at the extreme points. If ADX is higher than these ones, plus DI and minus DI, then there is some trend. The higher the ADX, the stronger the trend. If it goes below the other two, then the trend is going down and losing its force, or the counter trend is coming. The next thing is fractals. If you want to find this point when the trend is starting and catch it, you can use fractals. It's also one of the most popular TA instruments. Well, the geometry has known them for centuries. It is basically anything where a part repeats and copies the whole body. With trading fractals, it has 5 bars or candles or anything in a row. There are up fractals and down fractals. Up, the up ones are formed when there is one candle or bar which is higher than the two before it and the two after it. Then it's mirrored as a fractal where one minimum is the lowest, as you can see on the picture 1. The funny thing is that one same bar or candle can play as a part of 2 different fractals, and well, it's just magic as for me. But I have to repeat that only fractals are not enough, and you need to use something else to get the clear picture. Okay, well, and here are some of the things you can use. You just type candlestick cheat sheet into Google or anything you use, and you see this whole list of possible patterns and cheats and tricks and I don't know, life hacks and stuff. But again, it is best to use several indicators and indexes all at once. Look at the candlestick shadows and watch out if they form head and shoulders, and keep in mind the DMI and the volume analysis. Or you can use any other chart types and patterns and indicators. If it works for you, then use it. But I have to warn you, um, the most important thing about TA, technical analysis, is to use what you understand, what you can make sense of. Because if you just apply at random some TA tools without clearly understanding what they are for, it's pretty dangerous. Well, you can do it on demo accounts, but with real accounts, no, don't play with that. First, try new indicators and indexes and patterns. Learn them on demo accounts, and only then, after you're 100, well, not 100% sure, but almost 100% sure about how they work, then you can apply them to your real account with real money at stake. Okay. So what I want you to do now is to go and open the trading terminal of LH Crypto, log into your demo account, and find all the chart types and the indicators and indexes we've been talking about and apply them, see how they work, try to use them, and maybe even find some patterns we've been talking about and act correspondingly. Um, okay, next and last webinar is going to be an online webinar. So you'll be able to ask questions and our speaker will answer as many of them as he can. Um, the main topic of the fourth and the last of our webinars is trading strategies, how to create them and how to apply them, and how often to change them. So go out there and do your best. Good luck in trading.